Sevgili komşular, hepiniz hoş geldiniz. Bugün her biri alan çok başarılı panelistlerimiz dinle, dinleyeceğiz. Good afternoon. And welcome to this panel this afternoon. We have a great panel for you, great panelists to discuss some topics on Regtech this afternoon. Let me briefly introduce them to you. On my right, we have Dia Markova from the Monetary Authority of Singapore. I don't think I say anything new if I mention that this is a very innovative regulator on a global scale. When we were looking for certain guidance in Europe, for example, on cloud computing, and discussing with the regulators here how we had to wrap our heads around that, we had already some very useful documents from Singapore. So I think definitely a regulator to follow, and we're very happy to have you as a representative on this panel this afternoon. You worked previously with Innovate, the Fintech membership organization in London, and I think that definitely remains also very interesting. Then we have Niccolò Petrone from Medici, who was listed as one of the 30 Italians under 30 in Forbes. He's a European head at Medici, dealing with fintech and the expansion of the activities in Europe and the Middle East. Also worked previously in the United States. Medici is providing advice and networks to fintech companies. And I read that, for example, in '94, one of their founding partners already filed a patent for digital wallets. So definitely, I think a partnership to watch in the field of financial innovation. Then we are very happy to have Mete Can Eris, who is not only an accomplished attorney in the field of insurance regulation, financial regulation in Turkey, but is also advising financial institutions and governments and regulators as part of his consultancy for the World Bank. He told me just before this panel that, for example, he's working on projects in countries such as Sri Lanka and Myanmar, and helping regulators there to implement new regulations, and very closely looking at the role of financial technology in that field. And then we also have Emilie Allard, from the Luxembourg House of Financial Technology, which is closer to my home in Brussels. The Luxembourg House of Financial Technology is an innovation hub in Luxembourg. It is a public-private initiative with strong support from the Luxembourg government and also from the financial sector. It's bringing together more than 30 leading private sector individuals on its board, and for example the Minister of Finance. Again, I think I tell no secret if I say that Luxembourg is one of the innovative jurisdictions. That was already the case before attracting a lot of financial institutions post-Brexit from London. Emilie has experience in the fund sector and in big financial institutions such as JP Morgan, and we are also very happy to have you on the panel this afternoon. I will keep the introduction very short because I think we have a lot of topics to discuss. I think Regtech is really two factors, two elements coming together. On the one hand, after the financial crisis in 2008, it's an understatement, I think, to talk about a regulatory tsunami. More and more regulations come, and even once we thought that after MiFID II, maybe certain things would calm down in Europe, more and more regulations come, and there is more and more a burden for institutions to comply with regulations. On the other hand, the technology is evolving very quickly. Computing power is increasing. Moore's law really still exists. Artificial intelligence is more than a buzzword. It's something that we really see developing. Data mining, facial recognition, and so on. Technology is really going at a lightning speed. And bringing those two factors together, I think, are really drivers for Regtech as a sector within fintech in itself. There are figures like financial institutions spending over $100 billion in regulatory compliance, and for example, an increase, a more than 5-fold increase in Regtech investments between 2014 and 2018. So this is really going very fast. Regtech presents challenges. How do established players work together with those new innovative companies? How do you manage risk? How do you have lawyers and coders working together? How can Regtech not only help to, for example, improve your regulatory compliance, but also to make the consumer experience better? So I think there's plenty of things to talk about. I won't keep this introduction much longer, and I would suggest that we open the floor for discussion by maybe starting with asking each panelist some general observations as to how you see Regtech evolving over the last few years, the last year, and maybe highlighting one particular significant development that you've seen by way of a concrete example.
Okay, start with me. Okay, I guess it'll be helpful in this conversation to speak. I am speaking from a regulator's perspective. So there's really two terms there. One is Regtech, the other one is Subtech, which is which is the way us as regulators also we leverage technology in order to make more sense of the data that we process and our internal work. There are two sides of the same coin, really. We do have an objective of encouraging the industry to use technology more effectively in order to drive their compliance processes and make them more efficient. And reduce some of the cost burden you talk about. We also have an objective of making better and easier sense from our own data and being more efficient in our operators, in our work as a regulator. So MIS over the past few years has set up a data analytics team within which there is a Regtech department precisely for these purposes. It is both internally facing and externally facing department which works with industry to drive adoption of Regtech and Subtech. So that's one development on the Singapore MIS side.
Good. So I think the question is extremely interesting, and I will answer with the story. So I think it was end of 2014, and I was having dinner with a close friend of mine who was very active in the venture capital space in San Francisco. And he told me, Nicola, you know what? You should start looking into regulatory technology, because in 3 years from now, most of the fintech investment will flow into this category. And back in 2014, that seems to be kind of crazy, right? Because we were focused on payments, we were focused on lending, no one was looking into Regtech. So I think the key drivers for that discussion is that banks were sitting on a huge pool of data, and they were not realizing the value they could take out of it. There was no pressure at all in exploring the possibilities, so they were sitting and they were waiting. Now, at the same time, a few years after, we started receiving calls from our friends in the venture capital space, but also banks, because compliance costs were booming. Just by looking at the percentage of compliance cost on the total operating cost, that shifted substantially up to, I think, 4.7% against the 3.1% before crisis. So that was a consequence of the regulator stepping in and over-regulating. Now, why am I sharing this with you? Because when I look at Regtech, most of people think that it is just application of technology to compliance, regulation, and reporting. But my opinion, it is a way for banks to adapt their business model to a change infrastructure of their cost. And I think here is the real opportunity and the major development which we've seen in the ecosystem. Banks now understanding this.
Well, what I think is that it's a catch-up. So the new players innovating in the financial technology are much more ahead of the regulators around the world, and the speed they are working with and innovating with is a problem for the regulator. So the regulator has to innovate alongside these players to catch up with them and to regulate, but at the same time allow them to flourish in a sense. Because if we try to regulate these players with the ways we are used to regulating older players, established players, there is a clash because they are much faster than this and we are actually stopping them in that case. So regulatory technology is a catch-up game for me, for the supervisor to be effective and also be helpful in the development of these technologies that are very important from the sense of, and let me put it this way, so we see certain innovations in the general field like Uber or Airbnb. These are not problems that require solving actually, they're just helping us. So we do not have a transportation problem, we do not have an accommodation problem. But in the financial sectors, we have an outreach problem. Millions of people still around the world have no reach to banking accounts. Millions of people are uninsured. So financial tech is important for easing the tools that we are using. Okay, so mobile apps, etc. These are okay for us, but the main aim should be to reach into this untapped population. This must be the main goal. So the regulator should enable this through matching the fintech with its regtech.
And to me, I would go back to one of my work experience. I was a consultant before joining the Loft, and I had to experience the work of hundreds of people who were checking transactions on a daily basis to see if there is any anomalies, you know, the AML process. And what I've seen when I joined the Loft is the huge rise in Regtech solution, and especially on KYC and AML. And I saw directly what could be the impact for those. And to me, there is a twofold in compliance and Regtech. The first fold would allow most of the financial institutions to use solutions that could analyze the impact of regulations. And what we've seen is that there is a surge in regulation, and the time you have to implement it is shorter and shorter. We've seen it in Luxembourg, for example, with the UCITS 5 and the depository regulation. We had the final regulation 2 months before the entry into force. In 2 months, you have to adapt all your processes, and it's really difficult if you just have people who just have to do it manually. If you have the right tool, then it's easy, because there is AI that can just dissect all the text and bring you the right rules. And that would ease your compliance process. And this is, for me, a plus for the financial institution. And the other fold is for the clients, because they know that if there is an anomaly, they are aware directly on the day, and they can act directly. And to me, there is a huge decrease in the costs that are linked to that. So there is a decrease in the cost for the financial institution, because they have to hire less people, or they could focus on the added value for the clients. And the clients is sure that the money that he will pay the custodian or the financial institution is spent on real added value tasks and not on people that will go through text and calculation on a daily basis.
Especially because they're very expensive.
Yeah, I know. But I think the cost is really a key issue at the moment in financial institutions, and we have to be really careful, because if we do not act on the efficiency and costs of those institutions, they will not be able to survive. And at the end, it's the final clients that will have issues.
It's an issue of cost, but also, on the other hand, the penalties, I think, if you get it wrong. We see a lot of discussions around anti-money laundering and so on, are also quite significant and increasing. So I think it's probably a combination of those two. Okay, thank you. I think maybe moving on, or linked to that is maybe touching upon Regtech is quite a big topic. It's indeed, as you indicated, not only a question of helping institutions to comply, it's also regulators being able to monitor, help them in assessing compliance, also institutions making better use of the data they have, making also for consumers certain processes like know your customer processes less painful, less burdensome by making them more efficient. So maybe each one of you or some of you want to indicate some of the fields where you've seen really the most concrete applications. There are overviews that refer to know your customer, anti-money laundering as being really big areas of investment. But there's also in certain overviews I see a category like other legislation. So which are the areas or technologies and topics where you see the biggest concrete return on investment for the moment, and maybe also the biggest potential going forward?
I think we have mentioned them already, so we certainly see, if you look at, there are about 120 Regtech companies that the Singapore Fintech Association lists in Singapore. A big chunk of them are in KYC. So clearly there is an opportunity there to reduce the burden and to automate and be able to be much faster and more accurate in detecting anomalies, in detecting false positives and so on in the eKYC space. The other thing that Emily alluded to was codifying regulations, which is also a space that we've looked at within MIS, and we actually announced a grant scheme to support the industry to explore codifying regulations further. Now we have to be careful to think that technology is probably not a panacea for all compliance, in that if regulation leaves, and you'd appreciate that as a lawyer, if the regulatory texts leave less room for interpretation, then it's more adaptable to being machine readable. If it's a matter of understanding which type of service you're providing, what kind of regulatory text will be applicable to you, then that early stage is more applicable to an automated solution. I think talking about KYC, talking about codified regulation, they're the big chunks where we're seeing Regtech solutions being deployed, but the reality is that all of these, particularly when you look at the startups, they're all doing one specific thing within these big topics. And that's the interesting bit to us. How do you build a stack of solutions within introducing Regtech into eKYC so that together they provide a better service? Where does utility play a role? So we've been having conversations, we've been doing projects about building a eKYC solution for corporate clients of retail banks. So where does the government step in, or where associations come in to build these kind of utilities, where mutualization of information, for example, and reducing information asymmetries are beneficial. So I think the interesting bit in the next few years would be unpacking these big topics and seeing exactly where startup solutions, more mature solutions, utilities, what role, and the interplay between those, what role are they going to play?
Good. I think in order to answer, let me share with you what we have recently done with Ernst & Young in a recent report and analysis. So in order to understand which were the key case studies, we've approached the problem from two sides. Number one, we've been interviewing almost 100 banks and their compliance departments, and we've been asking them if they knew about any regulatory technology solutions and if they'd done any implementation. Now, surprisingly, only 20% had done something, and the verticals in which they've done something were compliance, then improvement of risk frameworks, right? And then some of them was pushing themselves a bit more on regulatory reporting. Then we also checked the other side, which is the startup side. So we analyzed 450 startups in the regulated technology space, and we saw almost the same. Right? The most funded were in the regulatory reporting, but also advanced use of data analytics, machine learning, and other things to specifically support banks' risk management and like stress testing and other things. Now, when I look at the implications of these case studies in the short, medium, and long run, then I think whatever involves risk management can be directly applied in the short run and medium run. But whenever you're gonna touch the regulatory reporting, this is way tougher. And we've been supporting a company called Exenica, which does exactly that. So they are responsible for data sourcing, data linkage, and then reporting in different formats depending on which is the regulation you're reporting for. And they are struggling in going to market because if you want to do an integration with a player like Exenica, that is a big thing for the bank, right? It's a big change. But whenever the banks will do that in the long run, they will see a substantial money saving in terms of cost, but also delivery time. Because that does everything straight away. So I highly suggest you to look into Exenica as an interesting case studies. Then obviously, as they was saying, anti-money laundering and false positive reduction is an interesting use case that we've seen together with eKYC and also stress testing use cases that I think recently Citibank has announced. So I think these are the key areas.
I agree that the regulatory reporting will be an area for years to come because from my own experience when I visit countries like you said, Nepal, Myanmar, Sri Lanka, and they are still using Excel files for the reporting formats and they're keeping their data in paper formats. So that's an area which will also allow these supervisors that are not experienced as the Western supervisors to bridge the experience gap, which is very important to bring the whole playground even. Although not a technology in itself, we should also be maybe talking about regulatory sandboxes because the fintech players are generally startups. They are not able to deal with the burdens of the established regulatory supervision frameworks. It may be capital, it may be reporting requirements, it may be technical requirements, human resources requirements. So the regulator, the supervisor, must open a road for these newcomers and maybe on a case-by-case basis through established criteria to allow certain players to test their new products so that we can, and I always come back to this outreach problem, the numbers don't change. I mean, we see growth in insurance, but in real terms, when you look at Turkish insurance growth, for example, it's close to zero over the last 20 years. We see a growth, but it's not real. So the insurance penetration is an issue all around the world. It's an issue to resolve, and it's an issue that obviously we cannot resolve through the established distribution channels. I mean, I call it the holy trinity of insurers, brokers, and agents. I mean, it has brought us here, but it's not taking us forward. It's not, the penetration is not increasing. There is this untouched, huge population. So the supervisor should think about enabling the newcomers to, if they show promise that they can reach to these people. We should be flexible enough to allow them to grow and succeed.
Can I, sorry to jump ahead of you, can I just pick up on what you said? Because I think we're maybe talking about two slightly different things here. So when we talk about using technology in order to support compliance and Regtech solutions, we're usually speaking about non-regulated activities, right? So these are B2B fintechs which are selling into financial institutions in order to help them, or which are working with regulators in order to help us do compliance more efficiently, make better sense of our data, all the things that we have been saying. And as Nicola was saying, we've been seeing a huge switch between the interest of the venture capital community from B2C businesses to B2B businesses and driving that second wave of fintech. When we talk about regulatory sandbox and when we talk about financial inclusion or more broadly using digitalization in order to reduce the cost of customer acquisition, we're typically talking about B2C companies. Now, if these kind of companies are performing a regulated activity, and in the case of Singapore, for example, they've identified that they can serve a group of customers by, but the way they want to go to market is coming up against existing rules and regulations that we have, then that is a use case for a regulatory sandbox. That helps us as a regulator to say, we don't want to be front-running innovation, we can't front-run innovation, but we're willing to structure a test where we explore whether we should change our rules in order to enable better services to go to market. And that's how we use regulatory sandboxes with the commitment to market that if the test is successful, we do change our laws so that then companies can come and then follow the footsteps of this first test. And go to market in a new way. But I just kind of want to clear that because I think it's very, and maybe that's a problem where Regtech companies struggle, is that if we keep on saying that fintech is about breaking laws and breaking rules, which bank in their right mind is going to hire a startup who's coming through the door promising to do compliance by breaking the laws, right? And that's something that probably we should demystify. Yes. Sorry, I jumped ahead of you.
I think we are seeing the same trends in Luxembourg. We're seeing a surge in KYC solution, in investment compliance, and regulatory reporting. But what I see as well is a consolidation in terms of KYC. Because if you just check the market at the moment, there are so many solutions. Some of them are based on blockchain. Some of them do not use blockchain for GDPR reasons. But what we experience is that there will be solutions that will definitely just disappear, and some will be created, or some consortium will be created. What's the good point with Regtech, and I would say it's also part of the job of regulators, is the fact that each new regulation can lead to new opportunities for Regtech. And this is something that we will experiment over the next years, because we have MiFID with solutions dedicated to MiFID. We have UCITS in Europe where you can have solutions for it. And at one point we might think, why not creating a Regtech that would cover all these areas? Because at the moment it's really segmented and fragmented, and you can find a solution for each of them. And I know from previous experiences that one of the goals from a financial institution is to have the golden source. So to have one single database and base all the system around this one. What about Regtech? Why wouldn't it be possible to have a solution that would cover all the needs? And this is something I'm looking for, because fintech should also bring some efficiency, some cost efficiency. Because if you have one solution for each problematics you would have, then the cost would not be so low. You would have additional costs each time you have a new regulation. So I'm looking to see at one point if one Regtech could cover most of the needs. And in terms of supervisor, I would not say that the supervisor should ask for new solutions to exist. They should definitely collaborate, discuss with some of the Regtech to see how they can actually intervene, how they could help the financial institutions. But as we said, they are most of them not regulated, and they are just there to cover some of the process of financial institutions, and they are not there to answer the needs of the regulators, because the regulators knows exactly what are the regulations, what it asks the company. But they could be there as advisors to help this Regtech to define the perfect solution that could fit the needs and for which the reports could be used directly by the regulator or the supervisor.
Because do you think there may be a danger if you become too prescriptive from the perspective of the regulator in terms of technological solution you impose, that you take away part of the innovation maybe?
I think the position of Luxembourg, for example, is to be agnostic in terms of technology. And I think it's important that the supervisor or regulator remains independent, because you have to be able to trust this entity. It's a supervisory body, and if it's starting to give, okay, you should do it like that and like that, to me it's not independence anymore. And I'm not sure you are able to trust it as you should. So to me it's important that the supervisor remains really independent and do not interact too much by saying you should do it like this.
Yeah, no, absolutely. We are also technology agnostic, and we would never see it as our role to be recommending one solution over another. There's these processes and policies in which we could be consulted on if there is any gray areas about their interpretation. And I think most of our fellow regulators would behave in the same way. We do. With our market development hat on, we do recognize that sometimes institutions feel more comfortable to do experiments with Regtechs with the knowledge of the regulator, which is why, for example, in Singapore we have a number of grant schemes around Regtech, around proof of concepts more broadly, where we give as a development as I said, with our development hat on, which de-risks a little bit the first step between an institution and a Regtech solution. We recognize that there is an inherent risk there to switch your provider to a newer company, to a new process, to a new policy. As I mentioned also, we also look at the roles of utilities, and whether you mentioned golden source of the truth in KYC world, whether it wouldn't be not more economical and beneficial to have one such source shared between various industry players versus multiple of these sources being developed in each institution. But we would never recommend one technology versus another. We wouldn't.
No incentive.
Yeah. No, it's not our job. It's not our role. It's not how you encourage a market to innovate in the first place.
Good.
Nicola, maybe to pick up on one thing you said, I think one thing that was striking is maybe that a lot of institutions had not necessarily looked so much at technology. Which institutions do you think get it right, and why do they get it right, and why are some other institutions slower in their adoption?
I think here the answer is really on what is the innovation department of a bank doing. Now, we have spoken with about 180 banks between Europe and Africa, and I've seen banks like Netbank in South Africa really giving pressure to the innovation team to focus on Regtech because they understand that is relevant. But if you go to even a mid-sized bank in Italy, that is not happening, because they're still focusing on the key fintech topic like lending, like, again, maybe KYC on the Regtech, but not Regtech as a whole, but really on specific verticals. So I think the solution here is that the innovation team should really act as a catalyst for onboarding the people in the compliance department and making them aware of the impact that a specific Regtech player might bring into their department. Now, this seems to be very easy to say, but when it comes to practice, it's way difficult because the regulatory and compliance team doesn't have any innovation KPIs in most of the banks. So why should they even spend time on evaluating a Regtech? That's not in their priorities. And I think this is the key break for specific implementation on the Regtech side into most of financial institutions. So I think this is more or less what's happening.
So would it be right to say that it's partly changing culture within institutions still?
Yes, 100%. That's why, in order to solve this issue, what we are doing starting from Italy is a joint venture with Ernst & Young to launch an execution-driven accelerator where we basically use our expertise in understanding and finding the companies, and from the other side, we use the core capability of Ernst & Young, which is really on the compliance side and assessment of the fintechs from that side, so you can make them safe and you can speed up the road to POC for most of the banks. So this is how we are more or less approaching the issue to solve it.
So it's about bringing in compliance teams also at a sufficiently early stage, maybe in the
Yes.
process, yes, and making people comfortable to deal with that.
Exactly.
I think what we can observe in banks is that innovation is mainly driven by one specific team, and there is a difficulty to communicate between the teams. And for example, the IT team will take a decision for, I don't know, the operation or the investment compliance team, and they will not share anything. They will not really ask what are the needs, and they will just impose this solution. Whether it fulfills the needs or the request, they do not care. They think it's a good solution that could solve something, and they just implement it. And I think it's pretty common, and it's something that banks have to change, or financial institution, is to actually create like a think tank and collaborate within the bank. We are pushing for collaboration between the financial institution to learn from the various experience, but most of the time inside the bank itself, most of the management is not listening to the real needs of their employees. And if they actually take the time to discuss with them their process, what are the problems, the pain points they're encountering, then they would have some clues about what they should look for and what they should implement.
So really about collaboration within institutions.
Yep.
And I think also, may I add a brief comment from a legal perspective, it's something that we see that some legal departments only come after the fact, and when they are taken on board early in the process, this is something that would definitely help, I think. And maybe turning that question around in terms of startups, there may also be startups getting it right and working well with financial institutions, and some startups struggling and not getting acceptance. What do you see in terms of best practices and interactions with financial institutions, with regulators? Who gets it right, and what is good practice there? I don't know if some of you want to comment on that.
Yeah, so I think there are a few factors for what we have seen. Because again, if you look at the Regtech ecosystem, there are not many startups out there. And so you can really soon understand who's getting the money, who's not getting the money. Right? Especially the ones that are getting the money, I think have 2 or 3 common elements. Number one, they have a CEO or a founder which has a strong experience in the regulatory industry, either coming from a big consulting company as the CEO of Exenica, or has been in the regulatory function of a big bank. So they have people with huge experience and with strong connection in the ecosystem. The second key factor, I think here, is that from day one, they have an exclusive tech partner for all the integrations. Because if you're a Regtech company, but you're not working with a tech player for the integration later on, then the go-to-market is extremely tough, very, 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 very tough, which might be either Accenture or EY or someone else. And then, least but not last, you need tons of money to go to market with them, because most of them are B2B company. The sales cycles are extremely long, and so they can die if they don't have enough cash to support the operations.
I mean, there's something about being able to identify the burning platform on which you're selling your solution, and I think that's valid for enterprise sales beyond the Regtech space. So I think sometimes marketing yourself as an innovation does you disservice particularly in developing a Regtech solution, because you're not trying to innovate for innovation's sake. You're trying to make somebody's, you're trying to introduce cost savings into a structure, you're trying to make somebody's life easier, you're trying to make someone better at their job, drive more incentives from their data, and ideally get to know your customers better so that your more efficient compliance processes, the insights that you drive from that are also then translated into some business development opportunities. So so the companies that we see that are, it's hugely difficult to get your first marquee client, which is where a lot of startups kind of die on the road to there, and a lot of investors even are hesitant to back B2B companies because of these long sales cycles. Once you're able to do that, then it has a much more of a snowball effect. And in order to be able to get your marquee clients, you really need to understand what their problems are. You really need to address that burning platform that they have with the conviction and both operations which are both technically and legally sound.
Yeah, I think that the main problem we could face, especially in Luxembourg, is not the first contact, because especially at the Loft, we are trying to help this fintech to get the right contact, try to find the partners who could benefit from these solutions. But the issue relies actually on the procurement process, because most of the company, the financial institution, have their procurement process in place for ages. And they're still asking for 3 years or 5 years of annual accounts. And those companies do not have them, because they're new, because they're still trying to get the first client, because they are like living on their own funds for some of them. Some of them have brilliant ideas, but they will not be able to just pass the procurement process. And this is something that we are trying to work on with most of our partners, to ask them, okay, why can't you change it? And some of the time it's just going back to the compliance department, which says, yeah, but you know, we could not take such risk. And sometimes it's not high costs. Some of these solutions are really cheap compared to big companies such as IBM or KPMG or any big four that would propose a similar solution. They are really cheap. But then it's difficult, and that's why we're trying to work on a certification lab in Luxembourg to actually provide the fintech with the first step of the procurement being standardized. They could just enter the process, ask for a certification at various level, and then they could go to some financial institution and say, yes, look, I've been certified, I've passed the stress test, I've done the first steps of due diligence. Could you just speed up the process? Mm-hmm. And that would maybe help some of the financial institutions to actually work with some of these solutions.
I think that's extremely interesting. And I remember by working with BNP Paribas that the first thing they did when it came to, speeding up the partnership with fintechs was to create a new batch of legal documents just for them, so that the agreement was short, the payment was short, right? Because the payment is as important as the speed of the procurement onboarding. Otherwise, they get paid after 1 year.
Yeah.
So I think they've been very progressive in doing it.
No, I think that's interesting, and that echoes a bit, for example, what you also hear in the pharmaceutical sector, which is also a sector very interested in having startups, having new companies to accelerate innovation. There's a kind of clash of cultures between big established institutions and startups, and I think the initiative that you refer to of this kind of certification is definitely something interesting. Maybe just to elaborate a little bit on this kind of due diligence, what kind of things you ask, or how do you go about it?
Well, it's a collaboration between Deloitte. We have also on board Temenos, we have Telindus, and we have Cisco and the Loft, and it's called Fin5 Lab. And actually, some fintech can just apply. There is a dedicated website, and then it's reviewed by Deloitte on the first step. Then they ask for some documents to do the first steps of the due diligence. And then depending on the level of certification they want, they can go to the Temenos marketplace to see how it can connect to the main operating system or banking system. And then it can go with Cisco to check the security level of the solution.
Mm-hmm. Okay, No, I think that's very interesting. I think one topic that we briefly touched upon, but I think maybe we can elaborate a bit more on, is about collaboration between institutions, because I think there may be some kind of tension between indeed developing solutions, and you alluded to fragmentation and a lot of different solutions being available, and on the other hand, a kind of standardization. How do you see that, and what do you see as barriers for institutions to collaborate, or kind of incentives to collaborate? The role of regulators is maybe one thing in that respect, competition law, some institutions being not very eager to share certain things. So maybe any thoughts on that?
Okay. I think that, I mean, compliance is probably the more obvious place for institutions to endeavor on industry-wide projects, because it's not competitive for the most part, right? It's not where you would stand out to your clients. And in that sense, where regulators can support the process is to be either partners or observers to industry-wide efforts. So that's the approach that we take in Singapore. We often work with the Association of Banks in Singapore to support industry-wide projects where various, including in the Regtech space. So I keep talking about our eKYC project, which is exactly that. It's the biggest project of that sort that we've undertook. I think for what it's worth, it might be useful to share that it's a project that in its first phase we brought to a certain conclusion. We came up with a product that was delivering a lot of our design requirements, but actually the business case didn't stand. There were no cost savings being realized by the product the way we developed it. So just as a startup, and our MD was very transparent about this. We learned from the experiment. We pivoted, and we're now trying to go about it second time and in a different way, with that learnings about the cost and the business case in mind. So I guess from a regulator's perspective, in addition to providing, to being there in the mix, so to speak, you also have to be prepared to sort of start from a small place, run relatively quickly, and if you come to a learning point or a failure, so to speak, embrace it and learn from that, and do it again. If you've developed, so in our case, we've developed a strong conviction that this is a utility that will be useful for the market, so we'll do it again.
Good. No, I think there are maybe three elements. One is that three barriers to Regtech to scale. I think the first one is really heterogeneity of regulations across jurisdictions. I think this is by far the key element here. Then there is a lack of standardization between the internal systems of the bank. That's why you cannot plug and play a Regtech solution unless you really do a serious implementation. And the last one, I think now with GDPR, all the data privacy related issues. Because as we said at the beginning, right, one of the key value added of a bank in leveraging a Regtech solution is by utilizing the data either for target offers to clients or to better profiling their clients. Now, in both cases, they might have issues on the data privacy side. And I still remember a case of a startup that we have selected called Corelytics, based in Switzerland. We were trying to bring them in Italy, but the language barrier apparently was even more complex than regulation barrier. So I think this is also a key element when it comes to partnership.
Yeah, and I want to follow on the standardization, and although we each have our own jurisdictions, at least in insurance, we follow a basis model, which are insurance core principles. And it creates a legal framework standardization for our frameworks. A similar joint effort may be made in the area of standards of Regtech products, as the the more they get established, the International Association of Supervisors, for example, or another international body established as a joint effort may put down certain standards with regard to Regtech products, which will allow the innovators to grasp the needs maybe much more easier, and the supervisor will know that as soon as that standardization is passed as a certification, like you put down, that would allow the supervisor to quickly adopt, maybe more easily adopt, and the financial institutions to trust more easily resolving that accreditation problem.
Yeah, I think in terms of standardization, it's a touchy subject, because in the European Union, for example, you have the regulation, and it's the same for every country. Each legislation can tweak it a little bit, but most of it is common. And there are a lot of complaints as well, because people say, yeah, but we are different, we want it to be different. And then you hear some people that are in favor of standardization even more than what is current with the regulation. And then it's difficult to judge what is the right level of standardization. Should we go for example, we speak about KYC. We are also working on a solution, and we've seen what you're doing in Singapore. And we've created such collaboration within Luxembourg with the different financial institutions. And in the beginning, they were like, yeah, but you know, I don't want the other people to actually know who are my clients. And they have the right to do so, and especially with GDPR. And then we convinced them that you're not obliged to know who exactly has this information, and you can have anonymization. So we've worked on this for the KYC solution. But then you think, yes, but Luxembourg is a small market. And we definitely are in favor of standardization. We've discussed with the compliance department. They are not against having a certain set of standards, but they would deviate for some specific clients or some risk that they would put on countries, for example. And then you're like, okay, but what's next? If you want to go European, because some of the financial institutions we've worked with are based in Luxembourg, but they're based in Ireland, they're based in France, they're based in Italy, in Germany. And then it's difficult because you can achieve it in one country, and then you try to just conquer Europe, and then you'll have to go all again about why collaboration is so important, and no, KYC is not about competition, and you can actually collaborate for the greater good of the financial institutions. And then, you know, people want to innovate. People want to have more, let's say, efficiency. And it goes as well on the scale. Because if you want efficiency just in one branch, then you will not achieve huge returns. If you think about Europe as a starting point or one continent, then you can achieve huge efficiency and diminish the costs. But then you have to convince each head of countries that actually there is no competition even between France, Luxembourg, and Italy. And then it's a really tough work to do. And I'm quite sure everybody can collaborate, but it will take years to achieve, because in the culture of people, the bank next door is your main competitor. And if you give him like one single information, he will kill you. And people do not have this culture of learning from the experience of the other. Because most of the time, the bank next door already experienced the same issue, and you just do not want to share. And if you shared with him, or with this bank, you could just maybe find the right solution.
So I have the impression that we started out with a panel maybe discussing or aiming to discuss technology, but that there are a lot of aspects around culture, collaboration, fostering innovative culture within an institution and between institutions that also come in the mix. I think you're almost running short of time, and I would like to take the opportunity to maybe open the floor for one or two or a few questions, if there are. I think I don't know if we have a mic.
It's a small room. Go ahead.
What Dea and John mentioned related to Sandbox, the regulatory sandboxes, that was quite interesting for us in Turkey, because we do see, well, I'm speaking on behalf of aggregators in insurance and banking, we do see that it's difficult to innovate in this space when the regulators has not yet followed acknowledging digital digitization, digital aggregators, etc. So the model that they described from Singapore sounds very interesting. And I'm curious, was that a conscious effort from the regulators on the regulators' part to change its processes to operate this way? Or is it like looking back on how it worked, looking back on how you operated, you're reflecting on it? So did you actually start implementing this as a process from scratch, working out, hey, I'm going to work with these fintech companies, flexing the regulation for a while in a very controlled manner, and then when it works, I'll turn that into regulation? Or is it, looking back on it, you reflect?
So it is. So maybe if you think I should clarify about the sandbox. So you're absolutely. It's a tool that we build in order to foster innovation on our market, and it's also very much a very useful learning tool for us as a regulator. It is not an environment where a small solution can get access to more relaxed regulation before that solution grows and then goes to market. It is very clearly an environment. So so I should also clarify that the participants in the companies that have gone through the sandbox come from very different sizes. So they can be big FIs, they can be small startups. The important thing is that what unites them all is that they have identified that they want to provide a regulated service, and then they have identified a rule or set of rules that we currently have that prevents them from providing that service in the way they intend to go about it. And therefore, we work together between the development arm of MAS and our supervisory colleagues in order to construct a test that relaxes said rule and lets us learn what happens on the market if we're to change it in the long run. And when we satisfy ourselves that no risk is added to the system, then we are prepared to change that rule. That's kind of the model of a regulatory sandbox. I think there's a huge excitement in the regulatory world when this concept came about, and as anything, sandboxes between jurisdictions can be very different. It can be a very different concept in a country like Singapore, where we can unilaterally change our rules and regulations. It is very different flavor across Europe, where that needs to be done within the context of EU legislation, the EU legislative process. For example, it's also something, for us, actually having few companies in the sandbox is a good thing, because it means that the rest of our rules and regulations allow for companies to go to digital financial services to be provided on the market in the real world, outside of the sandbox, without experimentation. So digital KYC, for example, is something that you can freely do, compliantly do within Singapore without going to a sandbox, which is not necessarily the case in other jurisdictions. It's absolutely a very useful supervisory tool in order for us to keep a pace with innovative solutions, but it's not the beyond all and all of fostering a fintech ecosystem.
Yeah. I think that in insurance regulation and supervision, at least, we have a single goal, and I try to emphasize that all the time. And the single goal is the protection of policyholders. The goal of the framework is not to protect the institutions, is not to develop the markets. The only goal is the protection of policyholders, and the insurance core principles follows. So the rules and regulations we have are established in their own time and depending on the needs of that time. Any rule that we see is no longer supporting the protection of policyholder or preventing it may be struck down. And anything we imagine would hurt the policyholders, if it is shown that it's not so, should be raised up. And I think the regulatory sandbox as an idea gives an opportunity to the whole jurisdiction to test whether when something is proposed, as you said, and the idea has a merit, it gives a great opportunity to test whether the established rules are actually still serve this purpose or not. And I think it's a very valuable tool. And the implementation would, of course, differ very, very much from jurisdiction to jurisdiction. For example, in Turkey, we have, although a very positive framework, at least on my point of view, we have an over-regulated framework. So the implementation here will be much more different than, let's say, Singapore. But it's a great tool, and it will allow, I think, many changes in the coming years to test. It's going to be a litmus test for what we have to see if it's still applicable or not.
Okay, thank you. Maybe one last short question. If there's anybody? That's a burning question for our panel. Okay. Now, in that case, I want to thank all of the panelists very much for their contributions. I think there's food for thought, and I think great things that can be done in this area. Thank you so much.
Thank you.
Appreciate it.